Welcome, everybody. My name is Jamie Bateman, and I'm joined by my teammate, Andrew Smith here. We are here to present a little bit of information about our brand new fund that we're launching June 1st. It's called the Integrity Income Fund, and we're here to do the investment summary, and we're going to put this out there for those who may be interested in investing. Andrew, how are you doing today?
I'm doing great. Thanks for inviting me along to talk about a great new fund.
Absolutely. So we're winging it a little bit with this presentation, let's be honest. And Andrew doesn't know how much he's going to be forced to say. My goal is to get him to speak more than I speak on this presentation. But anyway, here we are. Here's your disclaimer. You all can read this. And obviously, none of this is investment advice. We are not attorneys. We are not your attorney. We are not providing legal advice, investment advice, any of that stuff. There's risk in all investing. Andrew, anything to add?
Past performance is no guarantee of future results.
That's good. And the confidentiality statement at the bottom is important as well. All right, so executive summary of our fund. The Integrity Income Fund will purchase first lien position residential mortgage notes. So I'm not going to read all these slides to you, but the goal of this fund is, we'll get into it, but the majority of the notes acquired will be performing notes or reperforming notes, mortgage notes on owner-occupied properties. And the intent is to provide either an 8% or 8.5% monthly annual return paid monthly to investors. Andrew, anything to add there?
I think the monthly distributions are a great attribute of this fund, and it makes it attractive for a lot of investors. And the $25,000 minimum should be pretty accessible. And the 1-year lockup is convenient because we know a lot of funds lock up your money for a long time, but we want to be part of your investment plan, and we appreciate that flexibility, and I think you will too. It is only available to accredited investors at this point. Jamie?
Yeah. So I'm going to be just very blunt. This fund is going to be boring, predictable, and flexible, though it's going to give you options as an investor with a 1-year minimum commitment, meaning you can pull your money out after a year, but it's an evergreen fund, so you can leave your money in for the foreseeable future and go from there. So fund will be managed by me, Jamie Bateman, and my team, not just Andrew, but he'll be the primary fund manager along with me. But we do have the support of the rest of our team that we'll get into here. So one of the things we like about the structure of this fund and the strategy involved is that we're able to make a positive social impact. This is not a non-performing note fund. I am currently managing a non-performing note fund that is a little bit different, has a different flavor to it. We may purchase some non-performing notes in this fund, but the primary focus is either buying performing notes where borrowers have been paying, have a strong pay history, or reperforming notes where the previous note investor, previous lender, if you will, was able to get that borrower back on track. So this fund is more targeted toward working with homeowners and exiting through the borrower versus the property, and that means we're open to modifications, refinancing, repayment plans, trying to work with borrowers where there's communication and where we think we can work with them, because that tends to be the most profitable way to go for us. But it's also, like I said, it has the positive social impact. So more at the high level, as far as mortgage notes are concerned, as an asset class, they provide attractive returns while preserving investor capital and helping borrowers. So that's kind of the I guess three-pronged approach here. Is we're providing returns, but we're also very focused on preserving capital with this fund. There's a lot of uncertainty out there in the marketplace, and we see this, there's never a 100% safe place to put your money. That doesn't exist, but we see this as a relatively safe way to go compared to some other investing strategies. And that is for multiple reasons. But one is there's collateral, which is the property itself. And we'll get into that a little bit. So backed by physical real estate, the notes are available for purchase at a discount to unpaid principal balance. So although notes have gotten pricier in recent years, they're still able to be purchased at a discount to the actual principal balance. So just quick example, if we're buying a note that it has a $100,000 principal balance on it, we may be able to purchase that note for $85,000 or $90,000, depending on how much capital we're able to raise, because that allows us to have more purchasing power and get better deals. Frankly, when you buy in bulk, you can purchase at a greater discount. And these are on owner-occupied properties. We are open to buying maybe land notes and some other things where it could be a rental property, that type thing. But our primary focus is working with borrowers and purchasing first lien mortgage notes on owner-occupied properties. And multiple exit strategies exist with mortgage notes. We're not going to get into all the exit strategies that are available. Again, our focus is not on foreclosing and taking the property back, or even doing a deed in lieu and taking the property back, but those are options. And that's one thing we love about mortgage notes is we have options. We don't always know how every deal is going to go, but if we underwrite and do our due diligence correctly, that leaves us with options no matter how it goes. And helping distressed borrowers we touched on, that's really going to be a focus of this fund. We're trying to create a win-win solution all the way around. So it doesn't always happen with every investment, but if you take a step back and look at the portfolio as a whole, we feel like we can have a positive social impact, make our investors some money, preserve their capital, and everybody wins in that scenario. Andrew, anything to add?
No, I think that's a great summary of mortgage notes as an asset class. And now I think we could talk about the benefits of buying not just one mortgage note, but investing in a fund of mortgage notes.
Absolutely. So note fund benefits. So there are a ton of ways you can approach mortgage note investing. We're, again, not going to get into, go down all of those rabbit holes. We are active note buyers. We actively manage portfolios and funds of notes. This video and this presentation is targeted at more passive investors who may be interested in a note fund. So what are some of the benefits of note funds? Andrew, I'm going to let you take it away.
Sure. Jamie mentioned one of the benefits earlier, which as bulk buyers of notes will get a better discount. However, the benefits of a note fund are similar to the benefits of a bond fund or stock fund. We're going to diversify across geography, borrower profile, and property value so that the outcome of the fund is not tied to any one particular asset. So by buying dozens and dozens of assets, we'll be able to deliver a consistent monthly distribution to our investors. This is a passive investment offering. And that way, this diversification will take all the worry away from our investors, and they won't have to get involved in the day-to-day, because we'll oversee the day-to-day operations of all the little details, property taxes, insurance, dealing with the servicers, et cetera. This passive investment for our investors, there's just going to be no tenant headaches for you guys, just the distributions. This investment is, broadly speaking, uncorrelated to the public markets. It's not dependent on the performance of the S&P 500 and generally not correlated to corporate bonds or government bonds, because these are borrowers in their homes, owner occupied, and because they have equity, they're incentivized to keep paying their bills and not lose the house. And most of these loans are for borrowers who don't have perfect credit, so they pay attractive rates relative to the current best mortgage rate or the current rates of treasury bonds and things like that. This is an excellent diversifier for self-directed tax advantage accounts, whether it's a Roth or a self-directed IRA. A lot of investors are searching for yield in a rising rate environment. So this, as part of a diversified investment portfolio, would be an excellent diversifier, providing cash flow and consistency.
Yep. Yeah, and just a couple of quick points to add on to that. And as a passive investor or an investor who's open to investing in alternative assets, and really that term gets thrown around a little too much in some ways, but you may end up comparing, how does this investment compare to a multifamily syndication, for example? And one of the differences is with a multifamily syndication or a hard real estate syndication is that oftentimes they have the property picked out ahead of time, and it's one property, one huge property. So like Andrew said, this is going to be probably 10 to 50 assets in this fund. We have no idea at this point, to be honest with you. The current fund that I'm managing has about 37 assets in it right now. So just to give you an idea, so the risk is kind of spread out across those assets. And also the monthly payments, you're not waiting for 5 to 7 years for some big payout. It's a consistent cash flow strategy. Do notes have inherent tax benefits? No, they don't. Every asset class has pros and cons, and that's kind of one of the negatives to investing in notes. That said, like Andrew said, the bottom bullet there are ways around that. So if you're using a self-directed IRA, self-directed Roth, EQRP, solo 401k, there are many other options that you can use through various custodians, and we can provide some information on that later. That mitigates that concern, that gets around the tax issue. So our performing asset buy box quickly is first lien, owner occupied, principal balances between 50 and 200K in lender friendly states. So because we don't have our asset picked out ahead of time, we're able to actually kind of target and really filter out the assets that we want, and then notes with strong pay histories. That's what we're looking for. And again, we're able to buy those at a discount and still provide the yield to the investors. All right, so Integrity Income Fund as a whole, we've already talked about really most of this. 8% preferred return, 8.5% for early investors. To clarify, that early investor statement there is up to the first $250,000. So if you are one of the investors that invests up to that initial $250,000 that we raise, which we think will go quickly, you'll be earning an 8.5% annual return paid monthly for the time that you're in the fund. Monthly distributions, $25,000 minimum, 1-year lockup, and accredited investors only. All right, so here's a quick case study. We're not going to go down this rabbit hole for too long. I've done other presentations on this particular case study and many others, so we'd be happy to provide more details for you. We purchased this note as a non-performing note. The borrower was about 2 years behind, but there was a lot of communication between the note holder or lender and the borrower, and the borrower was actually making consistent payments. She just happened to have fallen behind because of a life event that had happened prior. Well, this interest rate on the actual note, the coupon rate was 10.99%. You can see the numbers here. What we ended up doing was a loan modification, and we ended up working through the borrower and doing raising her principal balance, extending her term, lowering her monthly payment, kind of giving her a fresh start. And that allowed her to keep paying, but avoid foreclosure, avoid credit issues. It also provided us a total IRR of over 60%. This is not the norm. We are not looking for a 60% return on every asset that we purchase, but we were able to sell that loan that was a non-performing loan to another investor rather, and that note investor's return was actually, looking forward, his yield was 15% on that purchase. So when I say win-win-win, we won, the borrower won, and the note buyer that we sold the note to won as well. Andrew, anything to add here?
No, nothing in particular. I just think this shows the power of mortgage note investing. There is a lot of upside, and as Jamie mentioned, the optionality.
Absolutely. Yep. So we may be targeting loans like this where they are non-performing, but there's communication with the borrower, their recent payments, and we can get them reperforming. Or we may target a loan like this as a buyer where it was actually the modification was already done and there's still a 15% yield for us. So just gives you an idea of the type of loan we'll be looking for. We have a link to a short video that explains note investing at a high level for those who are less familiar with investing in debt and buying mortgage notes. And then we do have a ton of free information on my website, labradorlending.com, lots of blog posts. We've got a free ebook that's really voluminous for an ebook. And so if you're unfamiliar with mortgage note investing, please visit our website and check out those links. Again, you can read this, why mortgage notes, why invest in a fund. Again, we're going to be actively managing the assets. I've been, I guess we'll get to my who I am and my bio here in a bit. And then again, why invest in the Integrity Income Fund specifically? You can read that there. All right, what can I expect as an investor? There's a quick onboarding process. We've actually teamed up with Appfolio, and we're moving our other fund over to Appfolio. That's how excited we are about Appfolio. So the investors will have a one-stop shop that I think you'll really, really like. And for the actual investor relations, if you will, and investment management. So you'll be able to check all kinds of information about both the assets that we're purchasing, as well as your specific investment and the details related to that. Andrew, you want to take it from here?
Sure. You can invest through an IRA or a Roth or another tax advantaged account. There are many types out there. And that is a great advantage when investing in notes, is going through a tax advantaged account, because although this is technically a real estate investment, a lot of the benefits like depreciation and other write-offs really aren't available to this. So it makes sense for a lot of investors to use a self-directed, which brings the question, will I be subject to unrelated business income tax or unrelated debt financing income taxes if you invest from an IRA? And no, we will not be using any leverage, so you will not be subject to those taxes or receiving forms for any of those types of.
Yeah, sometimes that can cause headaches with the CPAs who are maybe less familiar with mortgage note funds. And if the fund itself actually takes on leverage, and so that's not an issue with our fund. So you can absolutely use a self-directed account with no concerns about leverage. And operational experience, I think we have a slide that touches on that. Yeah. You can read this about me. I've really been in the title and mortgage industry since the early 2000s. I kind of did move away from that a little bit during the 2000s. And then 2010, I got into active real estate investing and have been, over the last 4 years, have been heavily focused on mortgage note investing. It's all I do. I was able to quit my full-time job. I don't have a full-time job. This is what I do. So I'm heavily focused on this. One of the reasons I bring that up is communication is key. And I am available, and I'm not, going to be trying to reach out to people at 11 o'clock at night or on the weekends as much as, during the day. I'm around to discuss things, and we communicate very well as a team. And so I think I've been a passive investor myself and have experienced, I guess, the full spectrum of poor communication and good communication and everything in between. So that's one thing that I think is a benefit about me being a full-time note investor and heavily focused on this fund. Again, you can read more about my experience. You can listen to our podcasts and different things. And I, for the last year and a half plus, have joined Chris Sevigny on the Good Deeds Note Investing podcast. I just launched my own podcast, which is From Adversity to Abundance. I recommend you check that out. I'm really excited about it. And then I manage the Integrity Mortgage Note Fund One. Chris and I launched that together, and our team manages the day-to-day, which is going very well. And then I've spoken at multiple conferences and different events, and most recently at the DME and IMN, which were in Florida, I guess about a month or 6 weeks ago. And you can check those out, more information about those events if you'd like. And then Cash Flow Expo, done a bunch of these events, as a speaker. And Andrew, anything to add about me?
No, I think it speaks really highly of not just Jamie's in-depth experience running a note fund, buying a lot of notes, but his network really speaks to the high level of integrity he has when he conducts his business. And I think that is a real shining example of how to run it's a key point on how to run a fund. So I'm happy to be on board with this, and I think it's an excellent opportunity.
One thing we haven't really, I think we talk about it here in a bit, but I also am co-owner of a loan servicing company, BuyFi Loan Servicing. And one reason I bring that up is we do have some influence there. And BuyFi is licensed in about 25 states at this point. And so as Andrew and I and the team go out to purchase assets for this fund, we can actually target states that BuyFi can service loans in. And that way we have a little more control over our servicer, and because that can be a pain point in mortgage note investing. But like Andrew said, we've been able to develop a network of attorneys and other vendors and property preservation companies, and through the years that I've been doing this. And I view this as a long-term and relationship-based industry. And so it's not something where I'm trying to make a quick buck here, immediately overnight or anything. It's a long-term thing, and integrity truly does matter to me. I do what I say I'm going to do my best to do it anyway. And I think that goes a long way. So
totally agreed with that. And one more thing, our extended network does include BuyFi Loan Servicing. And it's not just we have, as a big fund with a lot of assets there, it's not just that we have some pull with them. It allows the platform is built so well for what we are doing that it just allows us to easily scale, because it's such a better platform than so many other loan servicers out there. This one is BuyFi, stands for Buy Investors for Investors. And it's just such a well-run operation that it helps us scale as we bring in funds to the fund and acquire more assets. It's just fewer headaches to work with BuyFi, and allows the fund to be a whole lot smoother.
That's a good point. The investors in the fund won't be dealing with BuyFi directly, but trust me, we will. And it that matters. That goes a long way for the overall operations and the success of the fund. So here's a little bit about Andrew. He's you came on board 3-4 months ago, something, maybe not even that long, but you picked it up extremely quickly. And he's got you can speak about your background.
Sure. I have a little bit of real estate experience, but most of my experience lies within the technology platforms in the finance world that help funds run their business, communicate with investors, measure performance, and actually deliver the funds to the investors. So a lot of experience on the technology side, but also quite a bit of real estate experience.
Why don't you talk about briefly how you got here?
How I got here, I was formerly a product manager for a software company that provided a dashboard for independent financial advisors. And I was a product manager for the alternative investments application on that platform, and dealt with a lot of hedge fund, private equity, private credit, a lot of investments coming in and out of investors' accounts, and measuring that performance and viewing that not just for advisors, but for individual investors. And just got really interested in the diversification benefits of some of these alternative investments, and moved from building the software for the user to the user of the software, and helping to operate a fund on a daily basis.
Yeah. And you had some family issues, and then you'd reached out to Chris Sevigny, and then somehow our paths crossed. And honestly, I wasn't even looking for help at the time. We can do a whole podcast episode on your story, but your resume was so strong. Every time I looked at it, I said, I can't pass this up. So yeah, here we are. Now you're just crushing it for our team. We also have Sandra Andrews. So we only hire people with Andrew in the name. Not really, but Sandra's been on board with Labrador Lending, and she is the primary manager really of the Integrity Mortgage Note Fund. Obviously, Chris and I still have a lot of say in how that goes, and I'm pretty involved as well. But Sandra, that's her primary focus, but she is available to help us with this fund, and she's been phenomenal. She has a lot of experience with this type of stuff. So Andrew will be more involved in the Integrity Income Fund than Sandra will, but it's nice to have that backstop and that experience to pull from. And then we have Bryle and Jenna, who are marketing. Bryle's our marketing specialist, and Jenna is an administrative assistant, and they've been hugely helpful for our team. You can see our extended network here, just a few highlights: BiFi loan servicing, attorneys, accountants, paper stack. We have really good relationships with the different sources and different people in the business, and we've actually recently been developing some new deal flow sources, if you will, so sources of notes. Safeguard Properties, Appfolio, we already mentioned, and Quest is one of the IRA custodians, but we've worked with many custodians, so we can help you there if need be. Quick slide on the subscription process. Andrew, can you talk about this?
Sure. The first thing you would want to do is notify us of your interest. There's an Invest Now button on the website, or there will be when we're ready to accept funds. We'll have that information out to you, but click on the Invest Now anytime, and we will send you, when they are ready, the offering documents, including the private placement memo and all the other associated documents. And that's all online. You can review them on your own time, in your own on your own computer, and then e-sign them when you're ready. And we will be ready to accept funds through the Appfolio investment platform on June 1st, because that's the date we've decided to open the funding.
Yep.
And you can wire funds that way. And we also work with self-directed IRA custodians, from Quest to Alto IRA to any of the other ones that you may already have a relationship with, or want to create an account with, if you want to access this fund through a tax advantage account. And we'd be happy to work with you on the details of that. Just email us or give us a buzz.
Yeah, so we're really excited about this fund. Again, just as we wrap up here, some highlights and some key points. This is a monthly cash flow income based fund. This is slow, boring, predictable. If you're looking for upside, quite frankly, this is not where you're going to find it, but it's a fantastic place to diversify your investment dollars and hopefully beat inflation. We don't know where it's going to go. Certainly beating cash in a high inflationary environment with collateralized assets and predictability and options with only the 1-year lockup. So we're really excited about this fund. It's launching June 1st, so we hope you join us.